Alright, so yes, ladies and gentlemen, running short on time, quickly calling on a super engaging and enthralling set of panelists for our next discussion. Firstly, can we have the moderator himself for the next discussion? Please put your hands together, ladies and gentlemen, for Mr. Jagannarayan Padmanabhan. Can we please have you on stage? He's the Director Logistics CRISIL Limited. Yes, ladies and gentlemen, this session would be chaired by Mr. Anshuman Singh, Chairman and Managing Director, Stellar Value Chain Solutions. Can we have a huge round of applause? Welcome, sir. This session would be co-chaired by Mr. Navin Raheja, Chairman and MD, Raheja Group. A very, very charming gentleman, I must add to that, with a $1 million smile. So we're really looking forward to enjoying his presence on this discussion. Okay, it's my honor and pleasure to invite the panelists. Yes, it's my honor and pleasure to introduce our panelists, calling on Mr. Mirpuri, CEO, Chief Executive Officer, ESR India. Welcome, Mr. Mirpuri. All right, I'd also like to invite on the dais Mr. Sharad Gohil, Managing Director, Head of Asset Management, Indospace Capital Advisors. Welcome, sir. I'd also like to call upon Mr. Anshul Singhal, CEO, Embassy Industrial Parks. Calling on the Managing Director of Bhumi World, Mr. Prakash Patel. Alright, I'd also like to invite Mr. N. Shridhar, Group Director and CEO, Infrastructure, Industrial and Logistics, Hiranandani Group. And yes, last but not the least, I'd like to invite Mr. Aloke Bhuniya, Chief Executive Officer, Ascendas-Firstspace. Wow, just look at the panel, ladies and gentlemen. This session would go on and I'm sure it's going to be absolutely engaging. So yes, without wasting any further time, over to the moderator and the chairpersons. Thank you so much.
Yeah. Welcome, ladies and gentlemen. We are very conscious that we are between you and the lunch. We'll try and keep it as short as possible, but with the kind of speakers that we have out here on the panelists, it's going to be quite an engaging session. And what we're talking about is the logistics and the industrial park and warehousing sector. It's a sunrise sector which has caught the attention of both Indian and foreign investors, and from a place where it was developer oriented, it has become more a funds oriented who wants to be a developer. And all of this is what we cover in this particular session. I'll ask Anshuman to kind of kick off with the chair on how the warehousing and the industrial and the logistics industry has panned out. And from there, the co-chair will also give his opening remarks, and then I'll start engaging the panelists into the discussion. Over to you, Anshuman.
The very fact that such a large panel has happened in a conference like this shows that the most boring part of industry, the back end, the warehousing, has suddenly come to the fore. And that too with such a bang. I mean, so we have such an eminent panel here. Just giving a background, I mean, the word warehousing seems to be recent. Earlier it was all godowns and godams. So 10, 12 years ago, we were a country of only small sheds, which people used to call godowns. And this was not a sector even considered by the organized real estate sector. And today we have a set of panelists which are willing to with eminent panelists who are willing to invest several $billion into this sector just to build the infrastructure up. So in 10 years, I think we have moved a long way. Just to share some insights on how the sector has evolved. 10 years ago, 2006, 2007, when I started building out my earlier company and wanted large warehouses across the country. And I have signed more warehousing than most. In the last 10 years, I must have signed more than 40 million square feet. I was just, at the last count I was doing, I did a 40 million square feet signing over the last 10, 12 years. All the warehouses that I signed, left, used, whatever. And 40 million by no means is a small one. When we started signing 10, 12 years ago, the largest warehouse in India was 1 lakh square feet. That too, Bhiwandi had so many of them. And they had floors which used to break within 6 months, and the floors no longer remained floors, and they used to become cavities, and you could see hills and cavities on the floors. And the rentals used to be in the range of 5 or 6 rupees a square feet. In the last 10 years, it has moved from 6 rupees to any range between 6 to 100. 6 is, of course, an obsolete figure. Nobody sees 6 rupees. And on the user side, users of a warehousing side, the biggest challenge was that people still did not believe that we need vertical height in warehouses. Godowns were good enough because they felt 5, 6 rupees is the godown rentals. We'll do only block storage on the floor. It was a hard time for us trying to convince customers that the world does not work like this. The world has evolved over hundreds of years. The world works on vertical warehousing with a lot of technology and a lot of infrastructure. But the maths didn't work out. If you had to go vertical inside, you had to put in racking shelving, you had to invest 500 rupees a square feet or 400 rupees a square feet. That converted to a per month rental rate or return rate used to come to around 8 rupees a square feet. They said, why should we go vertical? We'll keep on going horizontal because 6 rupees rentals is what we keep getting. We don't need to go vertical. 10 years later, the land prices have become 10 times. The rentals have moved from 6 to 20. The infrastructure that we used to put it at 400 rupees is still around 500 rupees. Now the cost of going vertical is at 10 rupees. The cost of going horizontal is at 20 rupees. Suddenly, making good quality warehousing infrastructure in the country is suddenly making a lot of sense to a whole lot of people. Of course, the customers have not yet fully involved, but that's what's happening. 10, 12 years ago, I was instrumental in creating acting as the anchor and trying to create one of the first funds in this space on the user side. There was another large international firm which was coming into the country at that point of time, and then Lehman Brothers hit, recession hit, and they went back. And after that, the whole momentum slowed. But in the last couple of years, we can now see the momentum happening. We can now see that people now are extremely excited all over the country to get into this space. So some of the questions that I would request the panelists to cover on, because they represent various companies, is that today residential real estate investment gives a 2.5% return. A commercial real estate investment to investors gives a 5% return. A warehousing, being a new sector, an upcoming sector and a shortage in supply, can give you 6, 7, 8% return. But with a lot of foreign funds coming in, some of them expect 15% returns, 16% returns, 18% returns. How will you scale up when your expectation of returns do not match the client's expectation of return that he is willing to give? This is one of the sectors. One of the questions I would request the panelists to cover. The other question I would like you to cover is, in India, land acquisition is not an easy act. It takes months, sometimes years to acquire. How are you going to cater to this? Just to set the pretext why we need to discuss these questions, of course, this was a sector not so important till GST came in, because every time, every customer had to have a godown or a shed in every state. The volumes through each shed were not large, but post GST, most customers, clients in the consumption space are going to consolidate warehouses, move to large warehouses, and that's why the need for very good quality real estate infrastructure in the field of warehousing. And that's suddenly in the last few months, we are seeing tremendous amount of traction once the GST has settled. And I think there's a tremendous rush for good quality real estate. Now, in this rush for good quality real estate, how are the developers who are on this panel going to match the demand, especially in terms of yield rental returns, in terms of speed of delivery, because the land acquisition takes time? How will you compete or collaborate with local developers who have a faster speed? These are some of the interesting questions that I would like this
Excellent,
eminent
thanks.
panel to
Sure,
cover.
Anshuman, thanks. Mr. Raheja, over to you as a co-chair. You want to have your opening remarks on both the warehousing and I understand you also have an industrial park kind of a venture which is going through. So what are the experiences on that part? It'll be good to hear on that.
Yeah, Navin, Raheja developers. Anshuman was mentioning about the kind of returns which the investors expect. I personally feel the returns are always dependent upon the demand, the opportunity, the timing. It may be for any sector. Now, and how you optimize the land resource, because the land resource today has become very, very expensive. After Land Acquisition Act, government going into the policy of 4x compensation, the land is virtually not available which can make the project viable, because that is the first investment which we make. So looking into that aspect, I was mentioning about the industry, you mentioned about the industry. Way back in 2006, we had got a SEZ notified in Gurgaon, and it was adjoining to Reliance. Later on, the MAT came. Because of the MAT, we decided to shelve the project of SEZ, and the notification, because now a notified SEZ, what can you do with it? So we moved with the government to get a policy made that de-notified SEZ in Haryana will be a deemed industrial city. So we got it done as a deemed industrial city, and we were again waiting for it. Later on, I met Aloke Bhuniya Saab and Aditya ji also, Indospace, and I was, a lot of newspaper reports talking about warehousing. And when I thought of, okay, let me monetize this land on warehousing. Warehousing, although today is considered being talked about as a very lucrative business. But Alok told me that your land in proper Gurgaon at this price does not fit into warehousing. Go for industrial or something else. So this month only, I conducted an online survey for industries. And it was a shocking thing for me that the entire land has got online registered 5x times. And at a price, warehousing could give me, I don't think it could give me even 1/5 of that. So, Delhi, we already know Supreme Court has ordered sealing of all non-conforming industries. Acquiring land, 100 acres for getting an industrial city is impossible in today's scenario. And the same land which I thought I had wasted my investment, today has turned into a gold mine. Because this is the only land parcel which is within 20 minutes of Delhi, and where all the sealed industries can move in. So that is why people registered online. And there you can make use of your available FARs also. So I would like, as we all talk about only warehousing, we should look at alternate opportunities. We have a lot of good schemes in the Government of India, Startup India, Make in India, Skill India, a lot of incentives are there. So why we do not explore the new opportunities which the government has opened up now?
Excellent. Absolutely. I think from what you're talking about, from warehousing, you're moving into the industrial, and you're seeing there's a huge demand even for the industrial part of it. And there is a good take from the Make in India program, and the government initiatives are also propelling the need for such spaces to come into that.
And
so,
one thing, ground floor of industries can always be one floor of warehouse. Industries can be a warehouse, but warehouse cannot be a
excellent.
other way. You cannot
Got it. So I would like to get in,
develop-
Sharad, now, in context of the positive aspects part of it. I mean, there are multiple deals that has happened from Indospace, and recently also you signed up a particular deal. I would like to see I want to hear from you, what is a global people and the interest that is there from the funds and how they particularly see this space. So we'll look at the positive aspect part of it and then, kind of go through the discussion with others on the challenges and the issues which are there. Yeah,
Sure.
Sharad.
Thanks, Jagan. It's a pleasure to be here with such a distinguished panel here and also the audience. To get straight to your question, Indospace, as most of you will have heard, have recently entered into a strategic joint venture partnership, an exclusive partnership with GLP to really grow our platform to where we think the level of demand is. Currently, Indospace has built up over the last 10 years a portfolio of around 13 million square feet, 30 million square feet land banked, 12 million square feet under construction. And the biggest sign or the credit to this industry, and I think credit to this sector growth, is a company like GLP willing to take a long-term view, make a long-term investment into this sector of industrial and warehousing over the next 10, 15, 20 years and partner with Indospace going forward. We've seen many interested parties from a global perspective. As you know, we signed a joint venture with the Canadian Pension Fund last year, who have a different appetite in terms of their capital requirements and return expectations. And that was to create a stabilized vehicle that would hold stabilized assets going forward, and they again are here to take a long-term view on the market, not necessarily a 3 to 5 year typical private equity expectation. So are we bullish on this market? Yes, we are. I think from Indospace's perspective, we continue to acquire land parcels aggressively. We continue to expand into new markets cautiously. I think the key to growth for the business and what our investors want is to continue to invest in our core markets, which everyone in this panel will be looking to continue to invest in, whether that's in Jharkhand in the west or in the NCR or in Chennai, because they're where the key demand drivers are, and cautiously look at new markets or tier 2 cities. So I think within Indospace, typically we've seen a lot of demand from the warehousing sector, certainly in the last 12 to 18 months, fueled by e-commerce and retail. We foresee that continuing. I think post-GST and Make in India initiatives, the business has seen a large demand driver for light industrial manufacturing also in the last 12 to 18 months. And more importantly, I think that the key hubs such as the West and South, which are predominantly or historically industrial or light industrial markets, we're very confident in doubling up land banks there and providing more quality space.
So what I'm trying to get at is from the outside of India, how are they particularly seeing from a sector perspective and not something which is company specific? I think that's what the audience would like to hear. And how do you see that is the golden age? Is that how things are unraveling? And then what Anshuman kind of brought up in terms of the return expectation part of it, in terms of are you looking at higher teens, the kind of expectations, while that's a challenge as we speak? Those are the aspects that you're looking at.
So to answer that question, I think that the expectations from foreign investors into this market is not necessarily about the returns. What they want to do, and what we've experienced, is look at a scalable sector that has tremendous growth opportunities. And partnering with a partner such as Indospace or some of the other developers around this room, we offer long-term solutions. And I think that, number one, yes, it has continued to benefit from attractive returns. We have delivered attractive returns of 20% plus, and I'm talking development returns. So again, Anshuman was mentioning 8-9% yields. That's more of your core income-producing assets and benchmark to an Embassy Blackstone REIT listing or something like that. But I think development returns still seem attractive. We will see further cap rate compression in this sector, given the amount of competition, as you can see on this panel, that are here chasing quality grade A institutional space. Interest rates are rising, but development spreads, I believe, still remain healthy and have got a good delta.
So developer returns are attractive. So I want to bring in Aloke here on kind of get onto this particular point, and who has seen multiple deals happen, get your perspective in and on this. Over to you, Aloke.
Hello. So, in terms of the return expectations from the investors, I kind of agree with Sharad that from the investor perspective, that's the kind of a return on the development which investors are expecting. However, there is a band of investors which are there, and it depends on at what stage or what kind of a development they are entering into. And depending on that, it can be anywhere from like early teens to like 20% plus. It depends on what they are doing. I would like to address one of the important questions which Anshuman raised is, yes, there is a lot of capital which is flowing into the sector, and one good part about the sector which is there is a significant amount of demand that we see in this thing. But the challenge of execution is the biggest challenge which all of us, whoever are developing in this sector, will continue to face. And those things are going to remain, and those challenges are primarily in three areas. The biggest challenge is land acquisition. This is an industry which is still kind of ground story structure, and therefore not very, very land, I mean, you don't do very intensive development. So the land requirements are quite huge. And given the way the real estate development has happened over the last 10 odd years, the land acquisition is going to become more and more difficult. So for us to progress as an industry, I think what is required is for developers like us and users like Anshuman, we need to work together to create new destinations. Because otherwise what is happening, all of us are going, okay, 10 kilometers from the city and let's try to find out a land which doesn't exist. And end of the day, we are all increasing the price. So for us to have industry effectively developing, I think the users and developers need to work to create new destination and do developments. The second part of that is what we see in countries like China is going into more intensive development. So right now from ground story to maybe moving into 2 stories or 3 stories, and the user acceptance is very, very important in those situations. I think in very shortly we will start seeing that happening. And the third important factor which I think we need all the authority intervention is implementation of rule of law. Today, as institutional developer, whatever we are developing are all according to the statutory norms. Anshuman will agree today, otherwise of the stock that is there, 90% of that doesn't care about whatever the law is there. So there is always going to be that non-level playing field. And for us to move into the next stage in terms of the efficiency of the sector, the logistics sector as a whole, we need to see that those level playing fields are there. And I think if we are able to establish all of those things, more and more capital is going to be there. Because otherwise, I don't think the sector can move forward. I don't see how we are able to deliver another, whatever you believe the statistics, another 120, 130 million square feet in next 3 to 4 years. I mean, where from that will come, I have my doubts. So I think these couple of things is very, very important for the growth of the sector.
So from the growth of the sector, I would kind of come in, ask Shridhar about the kind of the business models, right, that is emerging from here. There was a time when there are developers who were looking for funds, and now funds have become developers, right? So that's how the change has happened. And I would like to kind of get in a perspective from you because you've been on both sides of it, both on the fund side and now being a developer. So your thoughts on how on the emerging business models would be great. Yeah.
Thanks, Jagan. Shridhar from Hiranandani Group, I advise and I'm the group director on the board. I also head the infrastructure and industrial business for them, along with the investment and strategies. I agree to a great extent with what Aloke said, and here we have a very good mixed panel of end user, 3PL logistic player like Anshuman, and who actually really anchor large industrial parks and bring business out of the parks. Now, there are three things that we need to address. One is the growth of this sector, which is logistics and warehousing. And I would think that it's become very location specific and now much more amenable for people to institutionalize and get into it, given the structural reforms that has happened in the country, like GST, Make in India, people looking at hub and spoke, the large regional distribution warehouses. Now, when we used to sit on the other side of the fund, to be more specific with the question that Jagan asked, is that we used to always be more focused on investing and saying, okay, if these were the rental, this could be the IRRs and this is where my yield could be. So it was more like an asset class where we thought money could flow in and you were more financial and less operational. Now, when actually at this current stage, as I look at it coming from both sides, it is to be looked more like a sustainable operating business model, because that's what is the need of the hour and that's what is going to create value as you sustain the pace of development of logistics and warehousing across all locations. It's not about taking up a 50-acre parcel, building out 1 million square feet of warehouse, renting it out. There is going to be intense competition across that location with 5 of us sitting out here and maybe some more sitting out on the other side. So then your rentals come under pressure. So then there is this classic, what do you say, a conflict which is between short-term and long-term goals of what you have to do. And then capital really doesn't chase, where the asset becomes a little bit more fickle. So this asset is a very strong asset, and as I see, it would be driven more with the needs of the end user segment as we go along in the development of the country and with the Make in India, GST and all of that stuff. I personally implemented supply chain strategies in Asian Paints, Coca-Cola, and the entire perspective of the end user as he sees it is very different. Even manufacturing strategies based on low cost to markets, where either close to the marketplace or close to the raw material, because it's very important. Logistics plays a very critical role. Just to give you a very simple example, in Britannia, the Tiger biscuits, which were like Parle G, for 3 biscuits, you used to sell it for 1 rupee 50 paisa or 2 rupees. But in one of the manufacturing strategies, if you manufactured it somewhere in a tax-free area like Chhattisgarh, and the market was Bombay, you ended up paying more than the MRP as logistics cost. So I think these things have been there, will continue to be there, and your client has now been much more enhanced by your e-fulfillment business that has come into the country, like your Amazons, the Flipkarts, where consumer durables are being sold heavily through this marketplace. And that marketplace will also have a latent generation of demand for the warehousing and logistics space, same for 3PL and the warehousing place. I think we need to look at this business more like an operating business, which will create sustainable value as you go around. Because recent transactions in terms of capital chasing this business, you have found that people have found difficulty in managing the IRR of cash flows. Because then market suddenly becomes very competitive. You have to start renegotiating rentals. Whereas the end user is always looking at reducing his overall supply chain logistic cost. He is going to pay you less. So then that's not the view that one should take while building this business. There is a huge scope. It is very location specific. And as Aloke pointed out, we need to create more new destinations across the country and more new different opportunities for use of land, as Mr. Raheja pointed out. I look at it more like you develop large parks along the periphery of major Class A and Class B cities and have a mix of a reasonable amount of industrial goods storage, warehousing, catering to FMCG, and parks, which is a mix of industrial and warehousing, which will throw up a decent number from a capital inflow point of view. I think it will become, instead of becoming a pure play investment business, it will be a development, operations and investment business as I look at it. And that should be the approach that you should take. It's not a typical real estate asset class. It's an industrial. It should be looked at more like institutionalized business as you would look at elsewhere. And that would be my thoughts on in terms of the differentiation in the way you look at from a fund and a developer perspective. We are looking at developing, building it, and moving ahead, even if it's going to be speculative, etc. Our plan is to build close to around 8 to 10 million in the next 7 years pan-India. So we will build new centers and create demand there, as Mr. Raheja and Mr. Aloke also pointed out. And that should be the model. Thank you.
Yeah. So thanks. While we've talked about a fair bit on the warehousing and the logistics parks, I would now want to get in Prakash into the discussion, who is solely concentrated on the industrial park part of it. So, and in an area where it has been significantly has a logistics presence. So I would like to get his views on what are the challenges which are there, what are the issues, and also the more important part of it, how does it think looks forward? Yeah, over to Prakash.
The first question was about the returns. Why is difference in the housing sector in Mumbai and or housing sector in the warehouse, the returns in the warehousing? The problem is lots of people earn money and invest in housing. And why in housing? Because they have benefits of the capital gain. When he sells one housing and has the capital gain, so he has to invest in the residential. That's why flow of the money is going only into residential thing because of the capital gain tax there. And now, as we went to Amitabh Khan sir for the proposal, we have given him that our industrial people, we want if somebody is selling a house in a city, if he's invest in industry, then it should not be charged as a capital gain tax as in housing, because it will create lots of employment in industry. It will create lots of flow from debt investment from housing to the industrial sector, and it will create employment. It will create GST. It will create income for the government, and it will create a rural area develop. So lots of investment will come from housing to industry. That was the one thing. Then it will sustain like this. Other thing, the land acquisition problem. What's happening now that as a private developer or local developer, we have some parameters to the land acquisition, where there are around 10 developers, private developers or local developers there. So we decide that this village I will do, this village you will do. So we have the boundary lines. So no competition for the land acquisition to the farmers. If nobody else is going to the farmers, so he will not charge, he will not demand more money for the land acquisition, and nobody will come there, and solely one developer can acquire that land. But now what's happening, lots of new funds, new institutional developer are coming, and they are focusing in one land. There are 5 institutional developer coming and going to the farmer and making the land acquisition. There is a problem because of if farmer is getting 5 developer for the same land, so he will definitely demand more money from the developer. And now, and we are local developer, we have sustained because we have a very thin margin of profitability in this warehousing and industrial sector. And we have around, I can say in Bhiwandi, we have in 20 years, we have created 15 crore square feet with the fast delivery things. And maybe you can say lakh square feet a developer can make in a year. Because he's not having any parameter or process driven thing where he has to have the Excel sheet where the cost is fixed. If I am acquiring land where some part of the land is demanding more money, so I am flexible and will give it to you and make the land acquisition complete and make the project fast. That's the thing.
So I want to get in Anshul here in context of what Prakash talked about, multiple developers coming in. So is it so easy? What are the thing on entry barriers, right? Is it tomorrow that I can think about, I want to become a developer, floated, maybe on industrial or on the logistics part of it? And do the local developers have a advantage in context of the international ones? So you want to kind of throw in some light on the entry barriers part of it. And is it a sunrise and the golden sector, so everybody should be pitching in and coming in? So what are the pitfalls that should be looked at?
See, to answer the question, I would immediately draw parallel to, let's rewind time back to about maybe 10, 20 years ago. And I think Anshuman ji gave some fantastic points on very ground level experience and asked the right questions. You draw parallel to the office market in India or the residential market in India. Let's not go to China, Japan, etc. When we started Embassy Golf Links, we were renting buildings at about 65 rupees a square foot. And that was a park level concept. Now at that point, people didn't understand what is the point of a park, what are the benefits of a park. And the building opposite outside the park was renting at probably 45 rupees a square foot. Today in the same park, we are renting at 150 rupees a square foot, where the building opposite, grade A, AAA, grade A plus building is not crossed 55 rupees a square foot. So there's still that 100 rupee parity which we created just by adding substantial value. Right? Now, I don't think warehousing will follow the same curve, but it will follow a very similar curve. Now, why would rentals move up? Right? Because today, customers are signing non-compliant spaces not due to choice, but due to lack of choice. I don't think any customer in this room or outside this room wants to sign a non-compliant space. Right? But because there is no supply of compliant, good quality, grade A scale, like what Anshuman ji was saying, where the floor, used to sink in. Now imagine in a warehousing operation, if the floor sinks in, what are you going to do with that warehouse? It's useless. So the minute you start supplying good quality, grade A spaces in a park environment, which has the park security and then your warehouse security, your pilferage becomes zero. You have good quality floor, you have watertight, airtight buildings, and you add that to the overall cost of your logistics, and you add the cost of a peace of mind on compliance, you can afford to pay a premium on the rental because that kind of negates itself. Sometimes it even overshoots the benefits because some of these benefits are not easy to calculate. So having looked at that, I think we have not even scratched the surface of warehousing supply in India in terms of grade A. I think if you look back 20 years from now, we laugh at ourselves saying that, what were we talking about, 10 million, 20 million square feet? It's going to be much, much more than that. I mean, just look at the office sector in India. The other question is about timing, right? Today, most of our customers, have an issue with deliverables. And why is that issue with deliverables? Because a lot of our customers are either e-commerce or 3PL or FMCG customers. Now, they don't know when their customer is going to give them business, right? So by the time they decide to take a warehouse on lease, they need the warehouse yesterday. Now, it's not possible to deliver a warehouse yesterday. So I think value can also be added on how you strategically plan your park, keep your foundations ready, all that, which people know, and keep ready space available or almost ready space available so that when a customer like Anshuman decides that I need to move into a box in a few months, he can then show his customer we have boxes ready. So there's a lot of, of course, real estate is all about location, location, location. But in warehousing, I think it's more about the overall offering, the reputation of the developer, the reputation of your brand, that how transparently you deal with your customers, how well you are executing your projects on time, what timelines you're promising in the market, what's the spec that you're offering, what's the expandability of your boxes. So for example, if you build, today I get a commitment from X customer at 300,000 square feet, but he wants the expansion for another 300,000 square feet possible, which is why you need larger lands. Back to what Aloke said, you can't build a park in 25 to 50 acres. You need to go upward of 100 acres to build a substantial park so you can give your customer expansion options. So I think there's a lot more. Just to summarize my views on and answering your question, is that it is definitely a sunrise sector. What are the entry barriers? Capital, capital, capital. Because this sector is all about large-scale capital. And beyond a point, private companies without institutional capital, long-term institutional capital, cannot sustain scale and can get easily eaten up by the scale guys, right? So just like office, just like organized residential, institutional FDI capital is the key for growth. I think a lot of us on the panel, in fact, probably all of us, most of us on the panel have good institutional capital backing us. But that doesn't mean that, we go and waste money. You still have to buy land properly. You still have to, get the land converted. You still have a holding cost of capital. So it is a very challenging business. So the entry barriers are, if you feel that मेरे को warehouse में चढ़ा देगा Amazon को 20 रुपया 25 रुपये भाड़े में और मेरे को 12% रिटर्न मिल जाएगा और warehouse तो कोई भी बना के दे देगा, then you're wrong. It is a fairly complicated business. It is proper infra borderlining real estate. It's a mix of the two. So, there are a lot of, even after you have the capital, there are a lot of funds in the market who have announced 100, 400 million plans. But I haven't seen them invest even 20 million,
Excellent. So what you're saying is that the entry barriers for the good quality people are going to be high. There could be always local people who would be playing in across. I just want to, from what Anshul mentioned, Jay, I want to bring you in. He said it's a sunrise sector. For a person who has seen warehouse and logistics being developed outside of country, what are the kind of experience and what could India look forward and kind of take drawn on the experience from outside of Indian shores? Can you throw light on that?
So thanks, Jagan. I think I've actually been in the industrial space for almost 15 years now, and developed warehouses in Japan, in China, Australia. We own a REIT in Singapore. When I look at the Indian context, we're fairly nascent in terms of the evolution of the industrial real estate industry. So one thing that you had mentioned was about funds becoming developers. The truth is that is not how it actually began. So you look at Prologis and AMB in the US, they were actually began as developers, and because they built a certain stock, there was interest in that stock from a long-term cash flow perspective, and they became funds. Then when they wanted to replicate that same model in Asia, they came here and said, there's no stock really to buy, we have to build. Some of these capital partners said, we understand what you're doing on a development side, and we want to partner with you early so we can make a little bit of alpha on the development side. But if you look at any of the developed markets or how markets have evolved, whether it's Japan, whether it's China, whether it's Australia, whether it's Singapore, there are players in the market who are pure developers, and you make money by developing industries and industrial buildings and selling them, right? So one thing that Prakash Patel does very well is that he builds industrial buildings, he's selling them, he's making a lot of capital gain in a short period of time, and that business model really works. Not everyone in the market needs to be a fund that holds on to these assets for 20 years. That's not necessarily it is. What we are seeing in the market today in India is that a lot of the good local developers, and I think Anshuman had asked about, will you partner with them? Some of the good local developers have actually realized that we can make a lot of money if we build goods. We have access to the land, we know the local conditions extremely well. We also have worked with customers in the past. We will sign up the customers, build the building, and then sell it in a matter of maybe 12 to 18 months to one of these guys who wants scale and make a lot of money. I mean, we can make a 20-25% return simply because it's quick, right? So from a time value of money, it's faster. So that evolution of the market will happen. You asked a little bit about barriers of entry. I think, India being, the structure and the regime that we have in place compared to somewhere like China, very different because land is freely held. You have had a situation where, land was bought for one purpose over a period of time, the paradigm changed and then you had to repurpose it. You have people who have bought land in locations saying that, 10 saal baad na, when the city expands, then main yahan pe mall banaunga, but abhi ke liye warehouse banate hain. And that's how, a lot of Gurgaon has developed like that. People have bought land 10 acres saying that, when Gurgaon expands, all the way to Daduhera, I'll make a mall over here or build a residential building here. For now, I'm going to build a warehouse. My land cost is zero because it'll always appreciate. I'm going to build and lease, and then I'm happy for the next few, 10 years. What has changed also from an occupier's perspective is that they don't look at a warehouse from a 1-2 year perspective. now that GST has actually been implemented, and we've been waiting for that for 10 years, they also look at it from a long-term perspective. So that evolution is happening, and it will take, I think, a good 5 years before you see different, people fit into their roles in the market.
Sure. Yeah. So I've just got an indication that we're kind of running on time, short of time. One last question, which can be taken up by any of the panelist members, which is not got answered, is how do you create large deals, right? How do you get those 100 acres, 150 acres and above, right? What does it need to do? So we don't want to end the panel with just a question mark. What are the kind of answers that we could look at? Anshuman, can you throw some light on that? Or anybody else, for that matter?
How do you do 100-acre deals? These are the people who need to answer.
No more possible. No more possible.
Sorry. What I was thinking was, we are a few developers, and having seen the other side, we sit too close to on 2,000 acres of land pan-India, and for the warehousing, we are looking at close to around 600 to 700 acres. But that's a very valid question, because as some of the panelists also pointed out, while capital still may be made available for chasing this land, acquisition of land in the Indian context is still a big challenge. Given in Gurgaon, there is a different set of laws. You have to get a CLU, there is a IDC, etc. to be paid on land out there if you want to do industrial and warehousing. And we recently closed our largest parcel of 250 acres, where we got an IIA. So in Maharashtra, it's called Integrated Industrial Area. It took us, being what we are, it still took us a year plus kind of time, and you had to go through the entire rigmarole. And the most important thing, while we institutionalize this business and grow and build, operate and grow this business, is the regulations that follow essentially on land acquisition and approvals. If that's made a little bit much more easier for us, then it becomes that much more faster in terms of growing this asset class. How do you accumulate land? I think different states have different regulations. You have to essentially go grab, if you grab agriculture, you have to get converted into from R zone to I zone, and then it depends from state to state. But that's a process. Is it impossible? The answer is no. But is it cumbersome? The answer is yes. So that's why probably the developers sitting on this who have got into this business have probably a slightly unique advantage. And looking at us, we are also big infrastructure developers, having built townships. So in industrial, you need power, roads, water, and then you do build to suit either for the warehousing or for the industrial. So we understand this space, saying, except that we need to get those customer base who will come and get this. But prior to that, one has to go through, like even Anshul pointed out, in terms of, it's not as it looks very simple, it's all about building a little bit of real estate infrastructure around the whole park and making the product of world standards, because gone are the days when people want to hire a godown by paying 8 rupees or 12 rupees. Now people want good quality warehouse compliant, as all the panel's members here agree. So to build that, you have to have these skill sets built into you, and that's how we'll go about acquiring land. And
yeah. Yep. Last remark. Sorry, I don't know the other people who wanting to speak, but
there is an easy way to acquire 100 acres. There is no problem. See what we do.
1 minute. That's the time. Yeah.
What we do, we don't acquire 100 acres and start the project. We acquire 10 acres, start the project, and nearby people will come to you only. You will not go to another people and sell it to
Prakash, I think you have a very local and a very hard stand there. Probably you're able to manage it. I'm not sure whether others will be able to go with it. So let's move on. Fair enough. I got you what you're saying.
There's a simple answer to that. Yeah. The acquiring 100 acres, there is a player in the ecosystem who does that. Now you can choose to integrate that into your business.
I got what that, yeah, fair point.
But there is a player in the market, the local market, whose business it is to aggregate land.
Understood.
And you can choose to take that onto your books. It is very cumbersome, and I know people here who have tried to do it and had,
socialize and get them on board. That's what you're saying. Great. Yep.
The new Land Acquisition Act makes the land owners participants and claim holders for 20 years. Perhaps people have not gone through the new Land Acquisition Act. If you aggregate 100 acres, you have to make them partners, you have to give them employment. For 20 years, you have to actually compensate them.
Fair point.
And you cannot do that. It is only those landholders who are already having land pre to the Land Acquisition Act.
Gentlemen,
That is
I think
how
we-
I said,
Yeah.
you must know what exactly is the Central Act on Land Acquisition.
Yeah, for that, basically.
And aggregating also is very difficult job.
Yeah,
And
basically.
particularly when you are near to a city where the land is expensive.
Yeah, but
Yeah.
basically what we do, we take into joint venture, we give them the construction area where he can earn more than 20
I
years.
think we
whatever.
completely run out of time last, and that's about it.
I'll
Yep.
put the closing.
Yeah, you can give the closing remarks.
I'll give
Yep,
the closing.
done.
I think excellent discussion. We saw the residential revolution in the last 20 years. We saw the retail mall revolution in the last 10 years. In the next 5 years, we are likely to see the logistic park or the warehousing mall revolution. And this will undergo a change. The discussion that we were having about the acquisition of 100 acres, I think the unorganized sector does it very, very well, but it does it in a very, very non-compliant manner. So there are partners, for example, in Bhiwandi, you have all the landowners who are participants in the whole progress and the owners of the land, but 96% or 97% is non-compliant. I think a lot of regulation will need to be looked at in the next few years. One point which was missed out was a lot of logistics mall space, logistics park space will be required within the cities. Right now, warehousing above 1 crore an acre is unviable, but we will need in-city logistic parks. For that, FSIs will have to go up. 0.5 FSI will not allow you to build multi-storied logistic parks like you have in Singapore or Hong Kong, whereas the land prices in India are reaching the levels of Singapore and Hong Kong quite fast, especially in the large cities. So that's another angle. So even associations like Naredco and EPRIA will have to work on this along with the governmental agencies to do that. Thank you.
Excellent. So thanks a lot, gentlemen. Thanks for this engaging discussion.
Thank you so
Therefore,
much,
close.
gentlemen.
Thank you.
Request you all to just wait back a minute. We have a small token of appreciation from our side. And thank you for being a part of this lovely conclave. Ladies and gentlemen, firstly, I'd like to invite Ms. Tara Subramaniam, MD and Head, HFC and Dwello, JM Financial and Member Council, Naredco, Maharashtra. Please put your hands together for Ms. Tara Subramaniam. She would be felicitating Mr. Jagannarayan, Padmanabhan. Thank you so much, ma'am. I'd now like to invite the governor himself, the CEO and MD of Nisus Finance Services. Ladies and gentlemen, put your hands together for Mr. Amit Goenka. Request you to felicitate Mr. Anshuman Singh, sir. I'd now like to invite VP Naredco National, Mr. Gaurav Jain, to kindly come on the dais and felicitate Mr. Navin Raheja. I now call upon the Treasurer of Naredco Maharashtra, Mr. Prashant Sharma, to kindly come on the dais and felicitate Mr. Jay Mirpuri, please. Mr. Jay One photograph, sir. Thank you so much. I'd now like to call upon Mr. Ashok Patni, VP Naredco National, to come and felicitate Mr. Sharad Gohil, please. Calling on Mr. Neeraj Kamdar, member Naredco Next Gen, to kindly come up and felicitate Mr. Anshul, Singhal, please. Naredko Next Gen, full of young and dynamic stalwarts. The future of Naredko, ladies and gentlemen. Thank you so much. I'd now like to invite Mr. Vishal Thakkar, member Naredko Next Gen. He would be felicitating Mr. Prakash Patel. Yes, now ladies and gentlemen, I'd now like to invite Mr. Gopal Narang, VP Naredko Maharashtra, to kindly come and felicitate Mr. N. Shridhar. I'd now like to invite Mr. Vikas Valaukar, member Naredko, to kindly come on the dais and felicitate Mr. Aloke Bhuniya. Huge round of applause, please. Yes, we're having some fantastic discussions, absolutely enthralling, engaging to the last minute. So once again, can we have a huge round of applause for all these lovely panelists? Thank you for taking your time from your busy schedules and being a part of the Real Estate and Infrastructure Investor Summit. All right, with that, ladies and gentlemen, we now announce a short lunch break, requesting all of you to please join us back by 2 o'clock. Okay, let's keep it 2:15. 2:15 sharp is what we begin our next session. And please make sure you're on time. Some real heavy-duty panelists are going to make their way at 2 p.m. sharp. So looking forward to seeing all of you guys after a super quick lunch break. Thank you so much, ladies and gentlemen. Enjoy your lunch.